Welcome to InvestEd Central's Market Minute, sponsored by StockCharts.com. Simply the web's best financial charts.
Good morning, everyone. Welcome to February 16th Market Minute. I'm John Hopkins, president of InvestEd Central. Right now, we get the Dow futures down 39, S&P futures are down 6, and NASDAQ futures are down 7. Both Asian and European markets were lower overnight. The market started out with great promise Wednesday with strong futures and a solid manufacturing report. As expected, the market opened higher with the NASDAQ climbing up near 2960. However, by early afternoon, the tide had turned, and by the time the market closed, all the major indexes were lower. Today's loaded with economic reports that could affect the market, including initial jobless claims, PPI, housing starts and building permits, and the Philadelphia Fed. There are no major earnings reports due out today. On the S&P, we've got the 20-day at 1329, the 50-day at 1288, and the 200-day at 1257. We've got support on the S&P at 1329 and resistance at 1370. The bulls ran into some serious resistance Wednesday after a strong start to the day. Once again, the S&P got stuck near 1355, unable to make the next step forward. But, unlike Tuesday, there was no magic rally by day's end. Still, the S&P easily held important technical support, so no real damage done. With options expiring Friday, a trip to the 20-day moving average at 1329 could easily occur, and as long as it holds, the bulls will be fine. Should that go, then 1312, the bottom on February 1st, could come into play. You should only consider getting involved in trades that at a minimum have a potential 2-to-1 reward to risk. And remember that the closer you get to your price target on a trade, the greater the risk to the downside, so put those profits in your pocket. This is John Hopkins. I'll be back tomorrow morning with another Market Minute.